All right, let's get started. All right, so no set topic for today. Guess we're just doing free flow. Does anyone have anything in particular they want to talk about?
We talked about holding awareness, studying losers.
Yeah. Uh, I guess the way that I would approach that is you have to take all your entries from a point of risk. Okay. So today, the best spot obviously was that 50 area, right? So if you're longing this,
When you mention a number, it always it's yes.
typically, yeah. Um, you know why I focus on ES, right?
Can you just tell me again?
Yeah, it's just because it gives overnight levels, right? SPY
Okay.
doesn't move after hours, and
Right.
SPX will just gap. So those overnight
That's
values are important to me. So I typically tend to watch ES, um, just because the levels, the
and
overnight. Sorry.
same thing goes for NQ, right? Same thing goes for NQ.
Yeah. I'll always prefer to look at Nasdaq over Qs. So, and again, the reason for that is just because they're futures. Yeah,
Right.
the overnight action is a value to me. Um, so obviously the level over the past three sessions has been this 68.50 spot. So in my opinion, when you're picking an area, right? Let's say we've had a bit of a balance here. We can say it's this 69.10 spot all the way down to 68.50, right? So this is essentially your range, right? And everything has to be from the perspective of risk to reward, right? So if you're longing the bottom here, your risk to reward's great, right? I use what's called a technical stop. Something on the chart has to invalidate my idea for me to be wrong. So I pick areas that I'm willing to risk against. So when we were longing this morning, we knew that price could come all the way down to 50 and nothing would be wrong with it. Okay. So with that in mind, these are where you want to be playing, right? Obviously, you want to find areas that are, you know, you have a clear line in the sand. You have a clear definition of what's going to be wrong for you. Okay, so you could that could come in a number of different ways. So, for example, if you're I don't know if you're longing ES and you missed the low, right? So let's say you longed ES and you're seeing it right about here, right? And so you're thinking, okay, there's a bit of a channel here, right? I'm going to draw something like this. I don't know, right? Say you're long, right? You're just riding this channel higher. Okay, well, shoot, break below. Sure, this is something that would, if you're long from anywhere in here, a break below this could be something you use as, okay, this is a technical break, right? This is something technical in the chart that proves my idea wrong, right? So there's it doesn't always have to be a flat level. It could be a number of different things. Okay. Um, but again, you want to find some sort of technical reason or technical area to risk against. Okay. Now, when I enter positions, Anon, typically it's just from the perspective of a conviction in a singular direction move, right? So I don't really love having targets. I don't like an end all be all target. I don't like saying, oh, yeah, if we bounce, let's say I'm on a long 50, and if we get 75, I'm going to close it. Sure, 75 gets hit, you close your position, and then you watch it just grind higher another 20 points without you, right? So that's not fun. Now, you should have areas of value that you think are going to be respected, right? So we knew 80 was important. We had that 90 area, right? We had a couple spots on the way up that we knew we wanted to trim at had they given it to us in a timely manner, right? Everything else is just going to come from scalability, right? We got someone with some background noise. Not sure who that is, but I think I'm hearing a TV or something. But scalability is the biggest thing. The easiest way to catch bigger moves is to just have enough contracts to where you're not so focused on capturing the most. So if you're scaling out of your position as it moves in your favor, right? You could have longed 50 and you could have had your primary target be 75. Cool. Sell half the position, right? You don't have to get fully out. The reason I don't care for a full target, right? you're automatically putting a ceiling on what you can make, right? And that's not conducive for having great days. Sure, you'll come out of the day green by doing that, but it doesn't necessarily mean that you can have your biggest day ever. You know what I mean? With short dated options, you'll find a lot of the time it's those 1 or 2 days that kind of make your month. Okay. So if you have a profit goal or you have a hard line target, you're automatically putting a cap on what you can make. Now, don't get me wrong. If you're just scalping and you're going to be in and out of scalps all day, sure, right? But if you're trying to, if you're entering, how do I want to say this? The way that I assess risk is based on that first area, right? So if we longed 50, here's how we would have assessed that. Let's go back to that 5 minute that we liked. Let's say, yeah, I mean, let's use 70, right? So if you're longing 50, just as we did in voice chat, let's say we were risking down to a break of new lows, right? So let's say we were risking about 8 points or 7 points. Upside target was 20 points, right? So 20 over 7, that's about 3 to 1. Okay. So this is a solid setup, right? Risk rewards pretty positive here at this 50 area. So you're assessing your risk at that kind of first key area. But just because that's your first key area, that's not your final target, right? The easiest way to capture big moves is just going to be to have the scalability to ride it higher. I know that sounds like common sense, and it should be, but if you only have two contracts, right? You trim one here at your big level, then you trim your next one at 80, right? Cool, you got two great trims and you executed that flawlessly for the position you had. But then you see it run to, 93, whatever. That's when you're sitting there FOMO, right? I'm not telling you to go out and buy more contracts, but at the same time, I'm not telling you if you only can afford two contracts, don't just hold on to a position hoping it does 300%, right? You still should trim at those key areas. Unfortunately, this is why having a larger account, it's easier to make money with more money, right? If you have 10 contracts, in theory, you can take 10 trims, right? Now, granted, selling one at a time is not the best idea, but if you have 10 contracts, you can essentially take 10 trims. If you have two contracts, you can only take two trims. You have less control over the position, right? So, I mean, the only way to, you know, really make sure that you're letting your plays work to their full potential is to just have more control over the position via larger size. But with larger size comes input from emotions, and maybe you're outsizing your risk. There's a number of other factors there. But overall, are you figuring out, like, are you asking me, like, bigger picture? Are you asking, how should you choose to scale? Is that more what you want to know?
Yeah. Just like, all right, say I'm in a position, I grab one contract and it just keeps heading lower, and I have a target of an upside. Adding more would be fine, right? At least to me. But then when it gets to break even, like I would want to sell. Like I want to be able to hold that into profit.
So you're saying you take a position, it goes red, and then you get out when it goes to break even?
Yeah.
That's a
It's
tricky
more, I
one.
guess I'm more emotions that I guess.
It's definitely emotional input, but I will say it's gonna be mostly case by case. Um, if you're doing that, it sounds like you don't have that kind of initial area that you say you're risking against, right? When you take an entry and it draws down, but then comes back to break even, I mean, you've seen those drawings, right? Where people will go something like this. I think you've seen those drawings that look like this, right? Where
Right, 100%, yeah.
yeah, so you see
Yes,
you see the charts that look like this, right?
yes, I have. Yeah.
So, this is their entry, right? Let's say price does something like this. Price comes down.
Yes.
Thank you. Price comes here, they get filled, right? Price continues to dip, and then it gets break even. This is where you're stopping out, right? Or you're taking it.
Yeah.
So this is the exact same thing that we talk about, right? It's just a visual form, so, price goes back up and boom, it hits their take profit. So this is where their entry is, sure, but this is the area they're risking against. So that'd be the same
Right.
thing as if I just did, let's remove this range. Let's just go like this real quick. So our 50 long this morning, right? We're gonna do two things here. So this is our entry, and let's say our target was that 70 spot, right? And our stop loss, as we mentioned, was the bottom of that, yesterday's lows. So if we took it, this is how our play this morning would have looked, right? Sure, contracts may have drawn down a bit, but that's the same thing essentially. If you don't have that kind of area that you're risking against, yeah, you're kind of trading blind at that point, right?
Yeah, that makes sense.
So just because your trade goes back, just because your contract starts red doesn't mean it's necessarily wrong. It all depends on the level or whatever technical structure or whatever validation you're looking for to be wrong, right? That's where you're kind of struggling. Before you enter a trade, you have to have two levels. You have to have the spot you're risking against, or the spot that you're, invalidated at. And two, you have to have some sort of important area where you're measuring that risk, right? So for us, we longed 50, but we said, okay, 70 is a good place to take trims. We're risking against the lows of yesterday, right? So that's 7 points of risk for potentially 20 points a game. So if we had dipped lower, so long as we were defending yesterday's lows, I would not be stressed, right? We just wanted to make sure we were in the position in case they ended up heading lower, but this was the point in which we would be invalidated. Okay?
Yeah.
So if you need to, I know this is only offered on like a few futures trading platforms, and I don't know which brokerage it
Yeah.
is that actually does this for you, but um if you need to manually draw this out to help you visualize, do it. It's not it's not
Okay.
it's not a bad idea. I mean, it's a tool for a reason, and so many people utilize it for a reason. So does that make a little bit more sense, man? You just have to, like, if you're finding yourself drawing down and you're just antsy to get out for break even, it's probably because you didn't know what would invalidate. Yeah, you didn't know going into the position what invalidated your idea. So you're thinking, okay, I entered, it's immediately red, I've been invalidated. So now if it gets break even, I should just take it. When in reality, plays for us, granted, today's plays were trash. I'll admit that. Not my best day, not my finest hour. But how many times do you guys see we take plays that draw down 10, 20, 30%, and then sure enough, an hour later they're super green, right? Like,
Right.
that happens to us all the time, and it's going to happen a lot, especially if you take same day contracts, especially with how volatile they are. Do you know how hard it is to exactly time the perfect bottom of anything or a perfect top of anything? You're gonna have margin of error, right? So it's just about finding those areas to risk against and just entering as close to those spots as you can, right? I promise you, unless you're chasing something in the middle of news, it is so rare to not have any drawdown, right? Just because the play isn't immediately green as soon as you take it doesn't mean it's wrong. Okay?
Got it.
Does that make sense, guys?
Thank you.
But yeah, seriously, if you need to draw it out, do it.
No, I'm gonna do that tomorrow.
Hell yeah. What's up?
Hey Max,
Someone's
yeah. So how do you compare with the VIX and you start trading with factors with VIX?
how do I use VIX?
Yeah. So VIX, using VIX only, you will try to assess ES, right?
Okay, let's do this. So you're asking, how do I use VIX to trade? Is that the question here?
Yeah.
Okay. So VIX is a measure of short-dated volatility, and it measures SPX contracts 2 weeks to 6 months out, right? So unfortunately, it doesn't measure same days, right? Same days is measured through VIX 1D, but honestly, VIX 1D isn't very beneficial to trading. It doesn't tell you a whole lot of information. But what VIX is it's a representation of the speculative value of short-dated SPX contracts. So if people are having I'm trying to summarize this because if we talk about VIX, we'll talk about it for the whole session. Um, Let me ask you this: if you see the market selling off really really hard, right? Are you more likely as an investor who has their assets in the market? Are you more likely to sell for a potential loss and protect your capital? Or are you more likely to think, oh, I'll ride it out. I don't know how low it's going, but I'll ride it out, right? Which are you more likely to do?
We'll set a stop loss and tell.
So, exactly, you're more likely to protect your capital, right? Or at least
Yeah.
90% of the world is, right? They'd rather protect their capital than potentially face losses or, have to hold a loss for an extended period of time. So people act out of fear much more aggressively than they do out of rationale. Okay? So the reason why it's typically acting as an inverse is because people are more likely to act out of fear than they are when markets are strong and confident and resilient. Okay. So if you see markets selling off really, really fast, right, and you don't want to sell your equity, but you want to be protected, what are you likely going to do? You're going to buy some puts, right? So price is moving very, very fast. If I'm holding puts and the value of those puts is increasing very quickly, right? And I see action is just selling off harder and harder and harder, I'm going to pay whatever, right? I realize I have to pay an arm and a leg to get these contracts, but I need that downside exposure. I need that protection. So I got to get it right here and now. So if you're on the other side of that and you're holding puts, if you want to sell those puts, you realize, hey, I have all the control here. I'm not going to sell you this contract unless you're willing to pay an arm and a leg for it, right? So the faster action's moving, this is just a representation of FOMO, right? People are missing out. They need that downside exposure. They're willing to pay whatever, right? Now, unfortunately, when you get those, when action slows down, a lot of that FOMO evaporates, right? And so that's what we saw right here at low day. So action is speeding up. We're selling off harder, 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 harder. Well, it doesn't matter how or why, but buyers showed up, and there's a flip, right? There's a flip of the ratio that takes place where most puts have taken profits, and we're now low enough to where calls actually look pretty good, right? So people are slowly shifting away. That FOMO is running dry, okay? Now think about all the people who enter in the last kind of 15 minutes of that sell off, right? They're all positioned up here. They paid the highest amount possible for their puts, okay? So naturally, you've heard me say it in voice chat before, right? Panic sells lead to short squeezes, right?
Yeah.
So what that is in real time, that's just the shorts who overpaid. They paid way too much for their puts, and now they have to get out, right? It doesn't matter how or why. Even if we had failed that bounce, right? If even if we had failed this and came back down, if we didn't make a new low, the same thing would have taken place, right? It's just about positioning. So what VIX can do, VIX will tell you when either A, people are overpaying for contracts and we're getting um SoCal, I'm echoing pretty bad off you. John, are you here, man? Thank you, man. Um, Essentially, um, you can use it as somewhat more of like a more valid and more real time RSI. Okay, so traditional TA is not something you would perform on the VIX, right? So, for example, volatility has been climbing the past 3 sessions, right? But as we already established, the general market has been flat, right? We've been range bound. We've been stuck within a balance for the last 3 sessions, but overall volatility has still been climbing. So what does this tell us? People are starting to form higher expectations of price action. They think a big move is coming, or they're just simply willing to start hedging their positions, right? There's a lot of uncertainty. People are now willing to pay a higher dollar for contracts because their expectations are of bigger price action moves, right? Bigger moves to come. Okay. So, in my opinion, there's a lot of different ways to utilize VIX. Short term, it's pretty tricky, but bigger picture, there's still a lot that you can observe, right? Is there a certain like time frame you kind of want us to look at and maybe give my explanation on how I perceive it? Because going over VIX is very in depth. Like I said, if we wanted to fully cover VIX, we'd be here for hours.
Yeah. If you see the today chart, it went up and it came back.
Yeah, so that's exactly what I was talking about, right? At the lows, right, when action is selling, selling, selling. If you're looking at this action this morning and you see this, right, action's faster, 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 volatility is very high, and we just keep going lower and lower. You're thinking, okay, well shit, I need to get in, right? So anyone who's holding puts knows that they command a high premium to get rid of those. So they're not going to sell their contracts unless someone's willing to give them top dollar for it, right? Eventually, again, it doesn't matter how or why, right? But as soon as buyers step in, everyone who chased puts is panicking, right? And they need to liquidate fast. So if you just bought puts, let's say right here in this candle, let's say you shorted it at 65. Well, you paid $1,000 for your contracts. This candle, even though it's right back to where you shorted it, you're thinking, oh shit, I'm wrong, I need to get out. But you go and look at your contracts, and even though the price of the underlying is still at the exact same price that you shorted it at, your contract isn't worth $1,000 anymore. Because guess what? All that FOMO, all that speculative value is gone. So let's say your contract's worth 700 now. Well, two things are happening. One, the IV on your contract has dried up, right? There's no longer that FOMO to get in. Second, the market just had a giant green candle. No one's really looking to short that aggressively. So you have your contract that you paid 1,000 for, and 10 minutes later at the exact same price, it's only worth 700 now, and no one wants to buy your puts. What do you have to do to sell that contract?
Okay.
Well, I'm looking for an answer here. Think about it.
That's all.
If supply is high but demand is low, what does supply have to do? Or what does price have to do?
It will be volatile.
Say that again?
It will be volatile, right?
I'm so sorry. I can't understand what you're saying.
Price will be more what we paid off.
No, the price will not be more. No, if supply is too high and demand is low, price has to come down. So for you to sell your puts, you have to decrease the price, right? If you want to get rid of that short that you have to make it attractive to someone by giving them a cheaper price, right? So that's what's happening all across the market. Now, a lot of people don't think about this too. Do you guys know what a market maker is? A market maker is not someone who's hunting your stop losses. Their only job is to provide liquidity. So when you sell someone a contract or you buy or sell an option contract, it's not necessarily being bought or sold to an individual. More often than not, it's being sent to a clearinghouse or a market maker who's simply there to provide liquidity. But when you buy an option contract, has anyone here ever sold premium? Have you ever sold covered
No.
calls or anything like that?
Don't you need 100 shares?
Exactly, right? So if the contract you're selling, if someone chooses to execute that contract, you have to either A, have margin enabled that will be the price of 100 shares at your strike price, or you have to have 100 shares available to give up in case they execute their price. So anytime you or I or anyone buys an option contract, either the person we're buying it from or the clearinghouse has to acquire 100 shares in case you or I decide to execute our position, right? So even though you buy an option contract for only 200 bucks or whatever, you're still taking control of 100 shares, believe it or not, right? And those shares have to be made available via either margin or collateral, okay? So when you buy a put, it's essentially like you're selling 100 shares right then and there. Now, when you sell your put back, it has the opposite effect. It's essentially like you're buying those 100 shares back. So everyone is panic buying into call or into puts, right? They're selling 100 shares at a time essentially, or at least that's what the market effect is, right? Now, all of their premiums get crushed because market sees a big old green candle, right? All that FOMO's gone. The value of their contracts is diminishing. They want to get out. They all do it damn near the same time, and they're all selling their puts. Okay? So think about that for a second. You've got all these people selling their discounted puts back into the market, essentially having to buy those 100 shares back each contract that's being sold back. That is, in its essence, a short squeeze. So when you see VIX getting, you know, exorbitantly high like this, right? And again, 18.8 is not, bigger picture. It's not a huge reading, but for the environment we've been in, considering the market's been range bound, yeah, when VIX goes up 10% in an hour, that's something you've got to keep an eye on, right? People are overpaying for contracts. If we even flatten out, all those people chasing puts are going to be offsides. And then eventually they'll have to liquidate and we'll get a solid bounce. Okay. So what I use VIX for day to day, you can essentially use it like a more realistic RSI, right? And you guys are familiar with RSI, right? Oh, something's overbought or oversold, right? VIX will tell you that because it's derived directly from SPX values. Okay. So if VIX is getting way too high, okay, people are overpaying for puts. And vice versa, right? If VIX is falling really, really fast, right, just like it was today, it doesn't necessarily need to say the same bounce, but regardless, look at what time it bottomed, 10:45. Look at what time we topped today, 10:45, right? So it's not a perfect inverse, but this told you, okay, right? VIX has just fallen, I don't know, what is that, like 10% or something? 1883 to the low of day. Yeah, VIX fell 10% in like 2 hours. So this tells you, okay, people are feeling a little too euphoric, right? We're getting a little, there's a little imbalance here, right? So VIX can essentially work as like a real-time, more accurate RSI. Does that make sense?
Yeah.
And especially with like breakouts and such. I mean, let's look at this level, right? So this area, this 17.4 area is a spot I've had marked forever. It's a very large spot. And all last week we continued to contest it, right? Well, let's see what we were doing on Friday at 8:35 when we broke out. Here's Friday at 8:35. Boom. So VIX breaks out, and guess what? ES hasn't broken its impulsive low yet at this point. But you see, okay, VIX is breaking out. VIX is breaking out of a big spot, right? And so another little micro opportunity for an entry here. You see VIX hit a high. You're thinking, okay, it needs to get back under that breakout spot for bulls to be in control. Well, let's see where we bounced. 930. Here's 930. So yeah, you see this first bounce, and this is something you could do kind of on both sides. You're thinking, all right, so ES needs to reclaim. Oh, that's what I want to do. You're thinking, all right, so here's the breakdown, right? And then here's the breakout. We've already got it marked off, but I'll just do that twice. So you're thinking, all right, we're popping. Is this a long that's going to be sustainable? All right, VIX needs to get back under this level for bulls to be back in control. ES needs to get back above this level for bulls to be in control. Well, sure enough, nope, higher low, it's defending above the breakout. And here we have it, the exact inverse, lower high, VIX is, or ES is defending below the breakdown, if you will. Okay. So VIX will offer plenty of opportunities to kind of double check or validate an entry, if you will. Does that make sense?
Yeah.
There's a lot of different ways to use it, but the most important one that I would say, like short term, is knowing when there is kind of a, I don't want to call it arbitrage. It's definitely not arbitrage, but knowing what there when there's kind of there's a quote that I really like where basically the stock market is watching the overreaction of everything, right? We overreact to bad news and we overreact to good news. A lot of the money that's going to be made is in that middle ground, right? So sure, good news should push a company higher, but it wasn't that good, right? So think about PLTR after hours today, right? The news was great. They had another killer quarter, but guess what? It wasn't good enough to warrant this price. So we sold it back off. Look at look at Oracle after announcing that news. You know, yes, that earnings was solid, right? That earnings was incredible, but it wasn't that incredible. So sure, we're still green above it, but this was an overreaction, right? So timing those kind of overreactions, and again, I wouldn't suggest shorting Oracle after that crazy earnings, but if you have the balls and you can kind of look at option premiums and see what people are willing to pay and kind of where money is clustering, you'd see these opportunities, right? So finding those points in which you see market is having an overreaction, there's a lot of opportunity in that. And I think VIX is one of the best ways to see that visually. Does that make sense?
Yeah.
All right. So coming into tomorrow, what do you think I'm thinking with VIX? Anyone?
And maybe not bounce.
Well, depends where we open. But as of right now, we failed yet another. We failed yet another continuation attempt, and we fell back under that original breakout spot. Right. So looking at a 30-minute here, and let me show you why this level is so important. Right. Look how long we were just pinned under it. Right. And then we got the breakout that was that tariff news. Bounced off it originally. That's where they defended pretty aggressively. Let's go on a bigger time frame. So yeah, perfect retest before we saw that other revitalization about 2 weeks ago. We've fallen back under, tested it again, and now we see that we've seen another failed reversal attempt, and we've fallen and have held back under it tomorrow or today. So coming into tomorrow, if we're still under 17.4, 17.5, this general area, I'm expecting VIX to start working its way back down, right? And markets should be able to translate that to upside, especially 3 days. When you see this type of action, right, where we sell off hard and there's just one level that just is a blind bid every time, right? Like it's very clear market values, we're valuing the market above 68.50, right? There's been nothing to change that so far. So long as we're above 50, there really isn't a reason to be aggressively shorting unless you're, playing the range short term. So if we pop over 6,900, sure, this is a decent risk reward setup for shorts to just continue playing the range. But if VIX continues to break down and you have companies continuing to report strong this next week, I don't really have a reason to be bearish if we're defending this area that we clearly are placing value above. So, and I mean, VIX is kind of confirming that for us, right? We've shown that okay, we're not, expectations. We might be placing hedges on, but we're in no rush, right? If people are going to overpay for premiums, we're going to take advantage of them. All right, who's got something else for us?
I want to see how oversold Meta is.
I want to see how oversold Meta is. Yeah, we can take a look at Meta. Sorry, guys, if you hear me sniffling. I think I might be coming down with a cold or something. Meta. Okay, so Meta has not the best earnings report. We have fallen under the 200-day. That's not good. Where's our value at? Let's throw on our volume shelf. Let's figure out where volume's clustered. Where has value been established previously? Let's look at the last 2 years. So you've got a lot of value built. Few spots. Your main point of value is between 460 and 530. I honestly don't think you'll get all the way down there. But your next big area of value is pretty close to 600, right? There's a lot of time spent here. We've tested it numerous times from both below and above. It's a bunch of empty liquidity in here. Let's see if we can actually fine tune this down a little bit lower to just the last year. See if that cuts off too much for us. Yeah, so it's still just clustered right at 6. Your main volume shelf, a lot. We cut out a lot of that extra noise and a lot of that extra fat, but this is still a pretty low liquidity space. I think your general area where you're going to start to see like aggressive buyers trying to step back in and prop price up is probably going to be closer to this 600 area. If you want to look, we can look at the monthly contracts and see where volume is clustered. So open interest. So yeah, there's a lot of volume, a lot of open interest on those 600 puts for the monthly expiration. A lot of volume on these 630s. And then not a lot. Okay, so you can see what's up.
I think it's a smart move to hedge my shares with a put.
What are your shares priced at and how big's the position?
So I got
Or a better question is, what percentage of your portfolio is this position?
71%.
70% of your account is in Meta shares?
So I got 25 shares and I got them at average cost of 658.
Okay. That's not terrible. I mean, it's equity. Do I think Meta's going to go bankrupt and go to Liberation Day lows? No, I don't. Let's just assess at 600. So do you have a stop loss on this? I mean, like their shares, in theory, you could hold them forever. If you give Meta,
Yeah,
I don't think you want to lock your capital up for 2 years, but I think if you give Meta 2 years, it could easily be at $1,000. But I don't think you want to lock your capital up for that long. I mean, what's your game plan here? Are you treating these shares like a trade, or are
I
you
was honestly trying to cut them after 640, but
okay? So we closed at 638 today, and you're still holding.
yeah.
So again, I know we haven't talked about risk until today's session, but you if you're gonna pick a level to risk against, you have to respect it. You can't flip flop and change your plan while you're in it.
Right, but then I decided just to go with like if I hit like if I lose more than $1,000 on it, then I'll cut it
So you're risking $1,000. Okay.
pretty much.
So if that's what you're doing, I also think regardless, even if you enter puts here, you're overpaying. I mean, this thing's been selling off really hard. Look at the volume the last 3 sessions. I mean, if we look at average volume, this thing is significantly above average volume. You're gonna pay an arm and it's a little late to start hedging.
Yeah.
I think your downside risk is like 600. I do think 600 is gonna get a good amount of respect, or at least this area. I mean, somewhere between 590 and 610 is gonna catch a bid. It might not V it all the way back up immediately, but it'll catch a bid here and offer you a chance to either, recoup some or at least add in, right? But
Right.
at this point, um, God, if you had just like if it was just like 10 or 15% of your account, that's still a big position, even if it is equity. Like 10% of your account in any one equity is a lot. 70%, my God. Um, I think you just have to kind of stick with your guns right now. Is just say, okay, if I lose $1,000, I'll stop out. Because 70% of your account, it's just,
Yeah.
I mean, you have no wiggle room, and I don't think Meta's going anywhere. I think if you wanted to just take 6 months off or a year off, Meta could easily be back at all-time highs. I don't think Meta's not going anywhere. They're not shutting down. They're still extremely profitable. I'm not worried about it. But I don't think you want to leave your capital locked up for that long.
All right. I am trading around it with other stocks, but and then just like filtering the profit into more shares, but
Oh my.
it go
Okay.
well.
Um, I would say just use that original plan. Um,
Okay.
just if you hit X amount, just get out. Just use a hard stop for it. But dude, yeah,
Right.
that's awfully aggressive. 70% of your account in one equity is reckless almost.
Yeah.
You've given yourself no scale, no scalability to add more. I mean, like I said, this thing again, most of your volume is clustered around 600. In fact, I'll be honest with you, if I see 600, I might finally get to buy some Meta. Yeah, a little side story. Meta is probably the worst investment I've ever made. I took a loss on Meta like 2 years ago because it's a story for another time. Meta's the one that got away for me, essentially.
Because what?
Huh?
You can't leave us with a cliffhanger, bro.
Oh, okay. So, all right, here we go. Way back when. Story of how I missed Meta. Basically, coming into the Fed rate hike environment in 2022. 2022 was a nasty year for tech stocks in the general market because we were in a rate hiking environment and pretty much all the stimulus money had been run dry. At this point in time, I don't know if you guys remember, Meta was spending tens, if not hundreds of $1 billion a quarter on the metaverse. And where are we now? Who gives a shit about the metaverse, right? No one uses it, right? Meta goggles are a joke. No one uses that stuff. It was a giant waste of money, right? So I, I bought Meta after this shit earnings, and I was averaged at like 190 or something, and then 2 or 3 quarters later, they said, "Hey, yeah, we spent another 100 billion on the metaverse, and we still can't put legs on our characters." So I was like, I genuinely think they're drying up their cash pile. They are losing leverage. They are not going to see return on this investment, if not for at least a long time. And here we are, 5 years later, 3 years later, no one gives a shit about the metaverse. That theory was still right. But things have happened, right? AI has come around, marketing on Instagram and Facebook has hit exorbitant levels, right? There were different reasons to be an investor in Meta, but at the time, I believed that they were wasting way too much money on something that was not going to pan out well. You could make the same argument that some companies are doing very similar things today. I'll let you guys fill in the blanks on those. But I ended up selling Meta, I think around like 110, 115 bucks because I didn't believe in the company anymore. And then over the next 3 years, I watched it 5, 6, 7x from where I stopped out. So, um, yeah, Meta's the one that got away from me. Netflix too, honestly. But hey, I'm in Nvidia from $14, so who cares? But yeah, Meta is a great company. I don't think they're going anywhere. In fact, this sell off will offer a lot of people a chance to get in at a much more attractive price. Um, I'm hoping to be one of them. Anything under 600 bucks, I'm going to start buying some Meta myself. But if you're not willing to lock up your capital for 6 months to a year, then yeah, it's probably not the name for you. All right. Got 15, 20 minutes left, folks. Who's got something for us?
I want on MSTR actually. I was completely into MSTR actually. I was a 70% loss.
For options?
Fun. Yeah, options. I was on 360 call for January.
Okay. 360 calls for January. I don't really blame you. Honestly, I liked it as well. But here's the thing, Bitcoin has been really flat for much longer than I think any of us anticipated. The thing about MSTR is their sole business model is owning Bitcoin. They don't really, I mean, they offer some like software services, but it's like it's not their main business offering. Um, I mean, their enterprise value of their software is, I think, less than 20 billion. Um, they own far more Bitcoin than anyone else. They're the largest known holder in the world. That's their sole business. But the thing is they trade at a premium. So we can run some numbers here, and I'll tell you how much of a premium you're paying. So quick Google search, how much Bitcoin does TRO. So as of last week, they own 640,808. So 640,808 times, what is Bitcoin's current price?
106.
106,000? Okay, so 106,000. That is, oh, geez, too big for that calculator. 640,808 times 106. So that is about 67 billion, basically $68 billion. Now let's go over here and let's look at the market cap of MSTR. Market cap is, oh, in that pack. Current market cap of net. Come on, load. Why is it not loading? All right, fucking useless. Okay, Google search again, I guess, because TOS doesn't want to display any info. MSTR market cap. MSTR's market cap is, as of November 2025, 77 billion. I don't think that's right. Market cap 76 billion. Okay, I guess that is right. Well, either way, so 76 divided by 68, 76 divided by 68 is 12%. So essentially, you're paying a 12% premium for Bitcoin exposure. All right. If you do the math on that, why would I pay times 106,000? Why would I pay 119K for Bitcoin when I can buy it for 106 right now? Right? So the only good thing about MSTR is it's obviously using leverage, right? They're using their equity as leverage to continue buying Bitcoin. If Bitcoin performs well, they make a ton of money. It's assumed that they're going to eventually start paying dividends on what they own, right? But for now, you're paying a premium. When Bitcoin is flat or weak, no one's willing to pay that premium. So naturally, MSTR will continue to fade, right? I'm super long Bitcoin, but I think paying a premium for said Bitcoin is a bad idea. So again, the reason why Bitcoin's been flat, but MSTR has continued to drop, that's why.
It's not moving at all, actually.
It's what?
It's not moving and it's dropping every day.
Yeah, Bitcoin's been. I mean, if Bitcoin's red, I mean, let's see. Bitcoin dropped what percent today? MSTR was. MSTR dropped 1.8% today. Bitcoin dropped. Bitcoin dropped 2.5%. Oh, well, they did you a favor then. Typically, you'd see MSTR outpacing them to the downside. But if you're looking for Bitcoin exposure, I think IBIT I mean, if you're looking for like SEC regulation and you want kind of a safety net over your crypto, probably IBIT. IBIT might be the best. It's just a Bitcoin ETF, right? It's offered by iShares. They're extremely well regulated. They're strong. It's going to trade pretty much percent for percent. I mean, look, the percentages are spot on. So if you want Bitcoin exposure, but you also want SEC regulation, iBet's probably your way to go. If you're long Bitcoin, this is probably a better tool to play options on. But yeah, with that being said, MSTRs, they're going to do amazing when Bitcoin breaks out. When Bitcoin goes to 140, 150K, MSTR is going to go crazy. But now is not that time, right?
Yeah. So by the year end, can we see 140 on Bitcoin?
I still think so. Yeah, I do still think so. And even if it's not end of year, I think we're getting it sooner than later. I don't think it's gonna be. I don't think we're gonna see. I think we see 140K before we see 80K. To be honest. Yeah, I mean, 25K down to 80K or 35K up to 140K. I think. I think 140K comes long before 80K does. And you guys know me. I'm just. If we see 80K, I'm gonna buy a whole lot more. But, anyways. Last 5 or 6 minutes, folks. Anyone got anything to wrap up on?
Can you discuss like the plan place for tomorrow? I mean, like that you told the Tesla, right?
Yeah, I should have been focused on Tesla today instead of ES, but this thing it's ready. It's absolutely ready. Um, I mean, if you read the outlook, I pretty much said above 470. There's really nothing. There's nothing blocking us from going and testing those all-time highs. It's gonna be a magnet price from here. There's no value established up here. The one gap that was up here has been long filled. Um, there's nothing up here. If anything, people are using this price as a magnet. So if we look at the contracts for this week, let's look at those 487s and 45s. Look at that. This is so rare, right? To see a little tidbit, right? When people are just expecting up, and they don't have a target, like when something's breaking out to all-time highs, you'll see conglomerates around whole numbers. So check this out. 500, big psych level. Ton of volume on those, ton of open interest, right? But 488 is the all-time high. So 487.5s have significant open interest, right? Everyone's expecting that number. This is so rare. When you see it's again, I don't have a reason for it other than psychological. People like whole numbers 480, 490, 500, right? Divisible by 5 or 10. That's what people like. 2.5, 1.25, those contracts are 99% of the time very low liquidity, and people would much rather play $2.50 further out of the money just to get greater liquidity on their contracts, right? But I'm telling you, 487.5 has great open interest because that's the all-time high, and that's where people are targeting. That's kind of that magnet price. So we had great structure today, right? We spent the whole session just buying dips and contesting that 470 area that was our last kind of pivot high up here. It was the gap and dump level on the second. But if we can get through that, again, there's nothing. There's nothing up there. Nothing. We should be able to get straight to that 488 area in a couple of sessions. And then hymns, I actually got to check in on it. Yeah, it really hasn't moved much after hours, but essentially, hymns had better earnings than anticipated. They've been kind of depressed over the last like month. So there's potential for a short squeeze, right? So they have rejected from 65, and we've been nothing but kind of just passive selling since then. So there's a lot of people who are likely sitting in shorts, right? We get good earnings, they gap it up, and there's an increase in volume, there's a good chance that a lot of those shorts are going to be liquidated. So I'm just using this kind of 47 area, big pivot yesterday, overnight resistance, rejection of the open. If we can find some value over this 47 level, I think there's a good chance that we see a little bit of a short squeeze into tomorrow. So we see over 47. I think we can see our way back towards 50, potentially as high as 52. Now, bigger picture, if we reclaim 52, we've got room all the way back up into 60 and all the way back up into 65. But 52 is going to be a pain in the ass to get through. It's a big inflection point. But short term, as for just tomorrow, we get through 47. We get through 47. I like 50 and 52 as short term targets for a day trade.
Okay.
Hell yeah.
Yeah.
All right, folks. I think this is a good spot to wrap up.